The stock market has done pretty well so far this year. As of the date I'm recording this, 7/25/23, the S&P is up almost 20%, and the NASDAQ is up over 36%. Many investors have almost made up all the losses that they suffered in 2022, so they're asking if now isn't a good time to cash in and protect their capital. It's a fair question after all. We've always been told to buy low and sell high, right? So isn't now the time to do just that? Well, I understand the sentiment behind that question, but the bottom line is people who actually do sell based on that kind of criteria have lost a lot of money. So I don't recommend doing that. Let me explain why. When you sell your stocks because the market is high, or because the market is low for that matter, what you're really doing is you're trying to time the market. You're saying that because of some data point, you're predicting what's going to happen in the market in the future. In this case, you're predicting that the market is going to tumble. The problem is that nobody can predict the market consistently well over time. No matter how convinced you are that this time it's the time to sell, for example, over time, relying on that logic will cost you a fortune. You might get it right once in a while, but over time, that leads people to the poorhouse. Think of going into a casino, because you know what? Predicting the market is absolutely the same as gambling. Sure, you might win a hand or two at blackjack, but over time, you'll lose. They don't build those casinos to give away money, right? Look, the simplest way to prove that trying to predict the market is a bad idea is to compare the performance of the stock market against how the average investor did with that same investment. Here's what I mean. Consider the performance of buying and holding an investment like the S&P 500 over a period of time, and compare that to the performance of the typical investor who had that investment, but that investor bought and sold during those 3 years depending on their feelings. Which approach did better? Well, based on a recent Morningstar research report, the average investor in the S&P 500 had a 6% lower return because of their emotional buying and selling. That's compared to buying and holding the investment over the 3 years ending April 2022. And you know what? It gets worse. When Morningstar looked at the best performing equity fund, the results were even more convincing. The fund returned over 40% during those 3 years, while the average investor in that fund earned only 20%, because the average investor bought and sold trying to time the market. So that means if you had $1 million invested in the fund over that 3-year period, and if you trusted your gut feeling when to buy and when to sell, you'd have $200,000 less than you would have had you ignored your feelings and thoughts and just held on to the fund. Now that's what I call an expensive mistake. Why did investors earn so much less than they would if they just held on? Because the average investor piled money into the fund when the performance was good, and then they yanked money out when the performance was bad. They tried to predict what was going to happen in the market, and they failed miserably. This repeats itself over and over again, even though it costs investors a fortune. And that's why I suggest that selling now, because the market is high, it might be a very risky move. Consider that the greatest investors of all our generation, Peter Lynch, who ran the Fidelity Magellan Fund, and Warren Buffett, they never timed the market. Of course, the right time to sell, it might be the right time to sell now. I don't know, because I can't predict the future. But I do know that making buying and selling decisions based on feelings doesn't work over time. And getting this wrong costs investors a lot of money, as we just saw. Yes, the market may go into a downturn soon. I'll go one step further. At some point, it will go into a downturn. But we're better off if we stay the course and compound our growth over time rather than take the risk of timing the market. Of course, you want to grow your money as quickly as possible. And of course, you want to safeguard your assets along the way. That makes sense. And while it's tempting to try to time the market by predicting what the future holds, you're better off by pausing and talking with me before you do anything like that. So the question is, when does it make sense to cash in? It's a good question. Well, if you need money now, or if your financial situation changes, it makes sense to consider selling stocks. But it's only one of many options. Again, that's a good reason for you and me to get together and talk. And if you're particularly anxious about some external event, let's meet. There are many ways to approach that issue as well. So the idea is that there are many ways for you to be comfortable while investing appropriately to achieve your long-term financial goals. Now, if you have any questions or you'd just like to meet and talk, just call the office, set up a time, and we'll meet or we'll talk on the phone. As always, it's my pleasure to do so. And below this video is a share button. Please share this video with your friends, family, and colleagues if you think that they might benefit from the topic that I just covered today.